Hey traders, this is Christian from Hertz Tribeca Trade Group with your end of day market recap for Tuesday. And what a weird day. Well, I'll start off the day where we're supposed to get in New York a huge storm, and you listen to the weather or you listen to CNBC, and it sounds like drama, drama, drama. The storm's horrible, blah 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 blah. We're supposed to get they said upwards of 2 feet today. We get 3 inches. As much as they were like trying to go into the streets where after the snowplow came, where the snowplow piled up the snow, and saying, "Oh my God," and sticking a ruler in the snow. I mean, literally, there's like about 3 inches of snow outside. So, I kind of use that theme for today's what we saw in the market today. There was this headline that came out in the morning about the Saudis boosting output. You take a look at what their quota is or what they agreed to. So they came right in line with expectations of the expectations is about 10 million barrels. That's where they came in with production. So sure, the previous month they cut it a little bit more. They were under that amount. I think it was a little bit of a knee-jerk reaction when you saw that they came in and matched what they said that they were going to do all along. I don't know. I don't really get it that much. I think it was just a little bit of an excuse for things to kind of sell off a little bit, risk off. Again, kind of shaking the weak hands out of the market, especially ahead of the Fed. I think we're just kind of looking for a little bit of an excuse to sell off. Market breadth, we started the day really negative today. You could see, so this is the chart of crude. You could see what we're doing now. This was the reaction, and crude started the day higher going into that announcement from the Saudis. We sold off, and we started to come back as they came back, and they're like, "No, no, no, we're still sticking to the plan." And again, they probably did this because of the overreaction. You see a headline number, and it kind of throws you off a little bit. But the API numbers that just came out showed a build of about, I think, 500,000 barrels today. So we're basically right back to where we started with, and even before this even before this move, the API numbers just came out about 20 minutes ago. But even before that, you could see for the day, kind of hammer bars all over the place. IWM small caps were really weak today. They fell down over 1%. I did get a little bit worried once we broke. I said, as long as we hold last week's lows, and this is why this market is very, very challenging to short. Because normally, just like a break up, that's normally your area to kind of get long. A breakdown through support is usually your area to short, and we did that. This was last week's low in IWM. We broke below it for about maybe an hour, and then climbed back steadily through. So we didn't end up positive on the day, but it just kind of chalks it up to from a harsh sell-off in the beginning of the day to ending just as a little bit of a digestion day. There's not much really to comment about this when you look at the chart. We are below value. We try to get into value. You could see that we just weren't ready to do it. This was Monday. Friday we came back from the lows and actually outperformed a bit, but that was not the way you want to close, especially trying to close into value and getting rejected was a little bit of a sign. And but we've got another hammer bar in here, so we are below value, which again I don't think is great. But all is not all is not lost. And same thing with the S&P. So again, here was the breadth today. You could see from the morning, it just got steadily, slightly better and better. I'll just expand that for you, just so that you have an idea of where we were in the morning. -6 for NYSE, and then kind of trailing back. So it never got positive, but it certainly, came in a little bit. But you still looked at today's sectors. The only thing that was in green was XRT, which is really odd because when we usually move up in the market, retail has been underperforming. So, pretty decent outperformance to the downside. Everything on underperformed, I should say. However, they didn't finish off the lows, and that's what I was trying to illustrate with IWM. Same thing with the S&P. And I'm just going to dig into a couple more charts here. First of all, if you go to the daily chart, You could see that we've got another floating hammer bar. So again, we started to get outside of value, which was a good sign. Yesterday, we just couldn't, we just didn't have any follow through today. But again, you got a floating hammer bar on the 20-period exponential moving average. So the trend is being held up here, and I think that's all that you could really take away from this right now. We'll just have to see what happens. Also looking at the hourly bar, we broke below, and I talked about this midday. I said, hey, we could easily get back inside. So this is this week's value area. So it's still neutral. There's really not much else to say. That's the same thing with IWM. Still, barely neutral for the week, but we are in value for the week. Q's a little bit different of a picture. They're the outperformer, and they're staying above the value area for the week. So they continue to show the outperformance. Nothing really. There's no exposure to any energy to crude in the Qs, so to speak. So you would think it would outperform. Kind of funny why it was down 24 basis points. Again, I don't know. Just I think a little bit of weak hands, a little bit of nervous hands going into the Fed announcement, but. I think that's pretty normal, and if we would have closed on the lows today, I would have said, not the best sign, but we seem to do okay today. So, I was busy kind of looking for things that I could add to in a little bit of weakness. I put on an Amazon trade. Very close to the lows of the day. I put on a double vertical, meaning I sold this week's put spread and bought a call spread for close to zero money. So if Amazon stays where it is, I won't lose money on the call spread because I've offset it with a put spread. If Amazon ends up a little bit higher, it doesn't have to blow the doors off this week, but if Amazon ends up a little bit higher, I'm in good shape. I also added to a couple tech names that I thought had nothing to do with today's oil sell-off. Maxim, which we saw calls being bought last week. I took a swing at a little bit of Maxim, big move up yesterday, just an inside day today. So, and maintaining the rally, and I like this chart, and I'm looking for upside here in the Maxim chart. What else did we do today? I actually bought an airline today, even though we didn't see any call buying. I just thought today, when they start showing things on CNBC where they show all the flights canceled and so forth, it's just basically for today. That's it. After this day, this seems like a way, way big overreaction to a possible storm. They gave the storm a name, and we got 3 inches of snow. So, I mean, really, really minor. I don't think it's completely done. I think we might get a little bit of ice tonight, but they've got machines to clear the ice off the runway. So this was, again, follow through. Why I picked JetBlue was because they had numbers on Friday that were pretty strong in terms of their PRASM numbers, and they're just sitting on the 200-day moving average. So that's one particular trade that I put on today. What else? Just today was just pretty light. There just wasn't a lot of risk taking, even on the lows today. We saw a little bit of call. We saw a little bit of buying on the dip in Google. We saw a call buyer. We saw a big call buyer in Weatherford today. WFT. They continue to come in on that name. Don't really understand why, but it is above the 200-day moving average. So if you want to give it a shot, I own this name in cash. It is above the 200-day moving average. If you remember the announcement last week that they're going to be getting a new CEO, complete fade. So gap up, but it's already back here. So if you didn't get a chance to get in Weatherford, there was definitely some call buying going on today. 47,000 of those April 6 calls that went up today. So if you don't want to mess with options that are, in a stock that's under $10, you could basically just buy the stock. You don't have to worry about any of the optionality at all, considering it's a $6 stock, which is what I've been doing. What else do we see? I mentioned some airlines. We did see a little bit of call buying on the weakness today in these names. THO, a name that's been absolutely gotten smoked after earnings, had a real nice move up the last couple months, and then it's just gotten completely wiped out after earnings. But it's halfway through this last earnings gap, and you could see a hammer bar that developed today. So I mentioned a lot of hammer bars today. That was one of them. We see this in a lot of areas. I got shaken out of the ECA trade yesterday. This morning, as I saw everything just moving to the downside. I figured if we get a close below the 200-day moving average, I'm done with this name. We did do that. I did add a small position back because it was kind of too close to tell right before the close. I think I'm going to be happy that I did, considering what oil is doing after hours. Besides that, we did see a little bit of put buying, which I think is normal, kind of a knee-jerk reaction. And then there was a couple notable trades. There was a nice OIH call buyer that went up right when oil was on the lows of today. And then look at this trade. Today, the gold miners got smoked today, down 6%. I think they were up nicely on Monday. I'm trying to remember what the exact percentage was, so I'll go to Bloomberg for that. Yeah, they were up 4.2. Crazy because on Friday they were up 5%. These things definitely move. They're not meant for the for the low volatility trader. The GDXJ, the gold junior gold miners, were up 5% on Friday. They were up 4.2%, and then they got smoked today. They went down 6%. But someone came in right at 410. Some of these ETFs you could trade up until 415, so 15 minutes after the cash close. And who knows? Somebody buying calls in the triple levered gold miners ETF. You want more volatility? I don't know of a better place than JNUG. They bought calls in this at 410. I don't think it was swept, but it was an opening position for March 24th. So not this Friday, but next Friday. Somebody looking for a big move for gold miners. And I mentioned in the trading room earlier, pay attention to these types of trades that are really, really short dated. Going into the Fed announcement, there's always somebody who's putting on either some type of interest rate sensitive trade, whether it be in TLT or utilities in XLU or in the regional banking ETF or something in the gold miners. So you can't get too much more levered than buying the triple gold miners. Junior gold miners, not even the big gold miners, but the junior gold miners, triple levered. So be on the look for that. I may construct a nice trade for the Fed announcement tomorrow for very low risk, something like a straddle that could take advantage of something like that. But pay attention to the tape tomorrow. I'm sure we're going to see those types of trades that are short dated right before the Fed announcement. So that's it for today. Thanks for watching today's video, and have a great night. See you tomorrow for Fed Day.